Well, good afternoon, investors. Welcome to our January 20th, 2026 edition of Bull Sessions. My name is Mark Robertson, and I'm joined here by my dear colleague. He's a magnificent skier also. And he and I both, Ken Kavula. Ken, I don't know how we keep missing our invitations to Davos, but year in and year out, they seem to leave us off the invitation list. Or did you get one and just decide not to go this year?
I just decided not to go, Mark. Okay.
Whole lot of posturing at the World Economic Forum, and again, I've been really busy, so I'm not up to date on the daily news necessarily. But I understand that Greenland is causing all kinds of rifts in the population over there, and obviously in the stock market this morning and today. So,
Mark, you've invoked this on. I don't think Greenland's the cause. It might be the subject. It's not the actor.
It's just a part of the whole overall picture, huh?
Yeah.
All right, that voice you heard was Houston's own Matt Spielman. Good afternoon, Matt. I suspect it should be better than single-digit temperatures down there.
If I add both digits of our temperature together, it's still double digits. So, although the kids at junior high are thrilled today because there is a chance of snow this weekend. So they're looking forward to a sprinkling.
Well, speaking of snow, I saw a blurb that Florida actually had a bit of snow. So, Kim, it doesn't get down as far as you are, but the Panhandle and part of northern Florida apparently got some snow. Can you confirm or deny?
I saw pictures that there was snow there, but I'm more concerned about this weekend.
And where are you going this weekend?
If you look at the weather patterns, it could drop to the 30s and 40s down here.
Oh, that's rough.
Are you choking, Kim?
A little bit. I'm guilty. I had some chocolate. It went down the wrong pipe.
She's
so let's keep.
She's probably drinking hot chocolate to prepare for the coming frigid weather.
Yeah. So let's get ourselves through some slides here.
All right, let's go ahead and press on. And yes, we still do have cherry fritters on the right there. All right, just a quick discussion. Of course, yesterday, everybody knows we had the day off to honor Dr. Martin Luther King Jr. And I do like that little summary that he made there. And I believe that many of those things will come to fruition one way or the other with time. But we are also noticing that Disney is in this week's update, and they are in the news a little bit these days. The groundhog, we'll talk a little bit about that. We have been talking about it in the green room. We are approaching the point where one groundhog ends and the next one begins. So that'll happen soon. Yesterday, Kurt provided a little bit of a tour of the website. We'll show you where you can find that. The recording is already out there. And yes, the Knights are preparing for a roundtable a week from today, and they are shoveling snow. Any thoughts, Ken?
Oh, no thoughts at all. I wish that a lot of us would actually listen and read what Dr. King wrote, and maybe someday we'll not worry constantly about everybody jawing at each other. I'm not sure that I'm going to see it, but
yeah, I'm increasingly convinced that the vast majority of us, even despite differences and philosophical differences, etc., get along pretty well. And it's really a relatively small slice that seems to ferment all the ugliness. So let's hope that we all get a little bit smarter and experience some of that redemptive goodwill. All right, good stuff. Checking in on Portillo's, Ken, we almost got to $6.
I noticed that it's the line's moving in the right direction for a change here. Ishimoto is gone now, it looks like, right? This is just a plain old price chart.
Well, you
with some
know,
RSI up at the top.
I had almost forgotten about the Ishimoku technical analysis stuff.
Ishimoku. Okay, right.
Yeah,
Uh-huh.
and I was listening to J.C. Peretz on the Compound with Josh Brown, and he actually talked about somebody who's really good at Ishimoku. So now it's back. You know, I'll probably bring it back next week. But
I don't remember the last time I saw one of these charts, Mark, that have a yearly span on the x-axis. I don't remember the last time I saw one of them that had significant motion under 30 on RSI and then has popped above 70 on RSI. At least looks like 3 times now in the last year.
yeah,
So we're getting a possible buy signal right now from Portillo's.
or a possible
I'm
stop.
sorry, I got that reversed. We're getting a possible sell signal. Since I don't own it, I don't do either. But
Well, I featured Portillo's somewhat in a half-hearted measure a couple years ago, I think, and the stock price was 19. So we've got a ways to go to get back to that. It's probably one of the casualties when we do our cleanup here. But I did buy some shares right before Christmas, and so we are approaching my cost basis. So one of the things that I'm noticing, and Matt, you can confirm or deny, they sure seem to be concentrating on Texas, and Kim keeps track of them too. New store in Lubbock, and I don't know where Humble, Texas is, but they're talking about opening
that's
one
by
there.
the airport. That's by the airport. Yeah, there are a number of places. If you search Google Maps for Portillo's, you'll get quite a few locations, and quite a few of them are still coming soon. There's a lot open. There's a lot coming soon.
Well, the dog on the left is Lubbock, well, according to Twitter, anyhow. So yeah, Texas seems to be a place of great hope for Portillo's. So maybe there's a Texas-Chicago connection that we can further explore in April when we're together.
There will be one not far away.
Okay. All right, here's our standard disclaimer. No investment recommendation is intended. We will talk about real companies in real time. This is entirely an education demonstration. And what we are here to do is to share ideas and basically notice and discuss the philosophies, methods, and techniques of the modern investment club movement. And we basically gather with friends to discover opportunities and attempt to optimize or make the most of those opportunities. But it is up to you to do that analysis on your own or with your club. We are not your boss. Make your own decisions about anything related to investing. If you would like copies of these slides, or if you have questions, or even better, suggestions for future topics, we do listen. And you've taken us in some wonderful directions over the last 4 or 5 years. And if I could go back and invest based on life after Google 4 or 5 years ago, probably be way ahead. We actually were talking about data centers a couple of years before anybody else. If you go back and look at the stuff, and we'll talk about that here in a few minutes. Any other thoughts here, Ken?
no thoughts, Mark.
Okay. Well, so with that, here's our update. We are in the final stretch. And Nikki continues to hold down the lead. She's an individual investor and a member of the Venice Sharks down in Florida. I think she actually works a little bit with the chapter down there in the western coast of Florida region. And so congratulations, Nikki. You are peaking at the right time. And Ken, there's your motivated investors. Have you kept these ladies up to date on?
I've communicated off and on with them. So they're aware of where they're standing. I don't know if they're here today, but they're certainly aware, and they've been watching it very carefully. I think excitement is building is a way to put that phrase. They're hoping they're going to get their star, so we'll see.
Well, we want them to get their star. In fact, we might want to reach out and see if we can get any type of story or perhaps a picture of the club, just in case.
I'm putting that on my to-do list, Mark. I'll try to make that happen. Okay, even if they don't finish first, they'll still be it's a brand new. They're a first timer to the groundhog contest.
Mm-hmm.
They've never been in it before, so to do as well as they did, we'll have to see what they think about themselves. Okay.
So we have a couple other multi-time group champions, the Golden West Club, 2-time champion. That's the Old Orange County Model Investment Club out of California. 2-time winners, and of course our Bower City Ladies, perennial leaders. They're among the top performing clubs in the history of the contest. I think they've been in at least 18 of the 19 years, and with 3 championship belts in their honor. And a lot of very familiar names. Ken Williams has made presentations here. Keith Tubbs, part of that Four Corners club down there that includes Fritz and Julie at 25 and 26. Again, I don't want to slant anybody or leave anybody off, but there's an awful lot of people on here, Ken, that we have spent time with, including Betsy Wills and Sandy Castor and a whole bunch of others. And you're clinging to a leaderboard position.
Well, not clinging. I'm feeling pretty good about it. So
Yeah, have you been out of the top? You've been between 20 and 30 pretty much the whole time, haven't you?
Well, no, I spent 3 or 4 months up above 20, but I've faded a little bit there. But I did fall off the list for a week or so, and then came back in the 50s or the 40s up towards 50. So I'm just feeling really good. 48%. I just if you can match the market, I'm happy, and I'm beating the market this time, so I'm relatively satisfied.
Well, Robin Hamilton had some questions right before we got started, and I think she's probably number 51 or 52. So she's just off of this list. And again, this list, the numbers that you see on the right, those are basically real time. They are updated based on our price feed. So it doesn't matter if they can't be covered in dashboards or not. So for an obscure company, it is still accounted for there, including any dividends or stock splits, etc. So those are all real numbers. And like I say, they update every day. We'll probably publish this every couple of days between now and the 2nd. And these numbers here will not necessarily match the dashboards that you find on the lower left for 2025. And that's because the dividends and stock splits are something that I only really finish up at the end of the contest. Because for 210 portfolios with anywhere from 5 to 20 stocks, keeping track of dividend adjustments on all of them would be a job for artificial intelligence and not Mark. So that's just the way it is.
Mark, I've been keeping track of the names of clubs that have appeared on the top 40 list, and then about 4 or 5 months ago you started showing the top 50 list, and I think Shooters Hill is a new addition to the list. I don't see it on my chart here, so we should do a big shout out to Shooters Hills for breaking the top 50 here.
Yeah, in fact, I've communicated with a few of them recently, so that's just a nice coincidence. And by the way, Kurt is at number 45. He insists that his numbers are better than that. So in fact, he is definitely implicated in firing me and taking over the contest for next year. So
I think I also read a post that watch out because he's probably going to win next year. So
he does harbor some illusions, but all in all, it is we
win it.
What's that?
I said we all think we're going to win the following year.
Well, I plan on winning.
But Kim, you and I aren't scorekeepers, so.
Yeah, somebody does have a distinct advantage over us, Kim.
All right, so yeah, it's a game, it's a contest, it is for fun, but I will share. I mean, it's just kind of amazing because many of the entries on here are generated by investment clubs. They reflect actual holdings in many cases. And that's true kind of from top to bottom. There are very, very few people trying to hit that home run and buy that, basically penny stock, which might go into orbit. There's not a whole lot of that type of behavior. And the fact that that is true, and then you see the average groundhog sitting there at 25%. And by the way, that's probably going down significantly here as we speak, with everything else. But when 2 out of 3 groundhogs are beating the market, that it's actually pretty special. And when you combine that level of performance by the individuals and by the groups that enter, and then you basically stack it up alongside 20 years of participation and results, which we'll be covering here in a couple of weeks, it really is pretty cool. And it's, again, it's not the same as running a club and generating an actual rate of return that you can point to, but it's still pretty special. And it is.
Mark, I want to. Oops, I'm sorry. Finish up.
Good. And we regard it as a tremendous source of ideas. And
I want to make the point for the folks that are new to us, Mark, that you can see all these portfolios from these different clubs and these different people on the Manifest Investing site. And I just find it extremely rewarding sometimes when I look at the portfolios that sit perennially in the top 25 or 30 or 35 or 40. Just take a look at them and come up with some ideas about particular pieces of those portfolios that are driving the portfolios. Last contest, for example, a stock called, I don't remember the name. The ticker is ASTS. What was the name of that company, Mark? The winner doubled on.
Space exploration technology stock. I don't remember.
Anyway, the story that I have is that in about the 8th month of last year's contest, my wife suggested that she was going to put $1,000 into that stock that was taking that guy and helping him double from 1 million to over 2 million in the contest. So she put her $1,000 into ASTS, and even though it had done fantastic things in 2025, it is still doing significantly better than almost anything else that she owns in 2026. So,
Yeah,
those kind of ideas with a little bit of play money can really be rewarding to people too.
I think Laura Scott's with us. She can clarify. She's a rocket scientist, so she knows that company. And so you can see pretty much how things have been going. We'll take a look at where you can find this year's scoreboards and then the entry process for next year. We'll be going over this in greater detail. Kurt covered it yesterday a little bit.
Yeah, Betsy is telling us that ASTS are cell towers in space. In other words, They're going to help us run communications when we don't want to put hard wire on the ground. Mark, I'm getting a question from Janet out in the audience.
Sure.
And when we get to the manifest stuff, I want to remember to try to answer her question, okay?
Okay.
It's a question about her dashboards, and I think it'd be very interesting for a lot of folks to hear. So Janet, when we get to the part today that we're talking about manifest specifically, I'm going to try to get you an answer for your question.
Okay. Hopefully it's still there and displaying. Some of them have temporarily disappeared, so.
I'm just catching up with the question boxes, and Betsy has also added, this is Betsy Wills from the Rocky Mountain chapter, and she's been a guest on our Groundhog Challenge features. She's been at our roundtables, and she's been at our bull sessions. So Betsy says that RKLB, Rocket Lab, has gone up over 190% in the past year. And that's the kind of stock that you could discover on a number of dashboards as well in this contest. People sometimes have a difficult time figuring out what to do with some of these wild ideas, so they place them on this imaginary dashboard just to watch them a lot of times, and in the process bring us ideas that a lot of times we don't even get when we're looking at a lot of different newsletters and everything, because they're really at this launch pad concept of just becoming profitable or not even profitable yet. So it's a great thing for us to play with. It gives us a lot of humor and a lot of satisfaction, but at the same time, it can make you real money at the same time.
So Ken, we talked about this a little bit yesterday. Sorry you weren't able to be with us yesterday, but I have a question for you. This is the audience was very divided on the response to this. So far, Kurt has it set up so that as the 2025 entries come in, you can't see them. So I asked the audience, I said, would you rather see the stuff as they're entered, or would you rather leave them hidden until the 2nd of February? What are your thoughts on that?
Well, I know what I prefer. I prefer that nobody see my entry until the contest begins. I've played it both ways in the contest that my chapter ran for 20 years.
Uh-huh.
And I think that there was a little bit of bandwagon effect sometimes when somebody's portfolio was posted in our contest early that seemed to be a person that people thought might have a really inside track on something. And just because somebody gets finds a nut occasionally doesn't mean they're going to be able to put together a basket. So I would prefer that they just go public on February 2nd.
Okay.
And let the groundhog guide us at that point. But I'm only one vote.
Well,
I'll talk more about this at Bink, but I'll say you're absolutely, psychologically speaking, you're absolutely right, Ken. Group decisions are more effective. One, when the participants are knowledgeable, but two, when they form their own independent opinions before they start collaborating.
Yeah, if you're in a fairly good size investment club, for example, it's very difficult to get a vote on something important that's impartial unless you just completely hide all the votes and allow people to basically have a secret ballot. If you try to do a roll call vote, for example, it's amazing after the first 4 or 5 votes how the votes fall in line a lot of times. And I'm sure that they weren't going to be in line when we called for the vote. So
yeah, I completely understand where you're coming from. What was interesting in canvassing the audience yesterday was it was pretty much 50-50 on people wanting to see them as a source of ideas, not necessarily ideas they could steal, but ideas they could study. And so I think where I'm leaning, because I hear the arguments on both sides, is to explore with Kurt the possibility of having people be able to turn them on or off. They can display their entries if they want.
So you're going to tempt them, or you mean turn their entry on and off? That's a good thing.
Yeah,
All
so
right.
you can't see the actual specific holdings. You'll see what I mean when we go there, but that way. And the other thing that if you want to talk about gamesmanship, you could put some fake stuff in there, fake everybody out, and do something completely different because you can change them between now and Groundhog Day.
I thought you had already had too much to do, Mark. Okay.
Hey, I'm out of this now. I can wreak havoc.
Oh.
All right, so this is all for fun, and I think you guys all see that. Here are the ground rules. You will be able to submit them right on a scoreboard page at Manifest Investing. You can reply to the forum entry just like you have in the past, or you can email me, and I'll take care of getting them in, and I promise to do it in a faithful manner. 5 to 20 positions, like it says there. I did raise the stock price to $5 to prevent penny stocks, Ken. We had dipped down to $1. I think we probably did that so Ardelyx could be in it.
I know we did that so Ardelyx could be in it. And I think it was the scorekeeper at that point, whoever that happened to be, that had, since he also wrote the rules, I think that's what happened. So
I think Kim was definitely encouraging.
Oh, you're going to blame Kim. Okay.
Uh-huh.
Interesting. I don't even think I was in that conversation.
Well, that doesn't prevent you from.
But yeah, you can blame me for anything. I got broad shoulders. But I don't know if I'm having internet issues, but I just now had the screen go to Groundhog Challenge. Is my internet that lagging?
Well, I
It-
just,
I'm just seeing
I just,
slides.
yeah, I just
We're
now
not
switched to
getting
the screen.
we're not getting a lot of people, Kim, that are telling me there's some kind of lag. So it probably has something to do with your internet at the moment. Yeah.
Okay, so we do limit it to one personal entry, but people like Herb Lemkool will submit for multiple people and multiple clubs, so I can take care of that also. We are set up to take care of that. So yeah, you can generate more than one entry, but you are limited to one, basically with your name on it.
Mark, the most common question that I get is, can you put in ETFs and mutual funds? And how do you want to answer that?
Yes, you can.
Okay, just a simple yes. All right, good.
Yeah, with the real-time scoring, and Kurt has fixed the problems with the dashboards for next year. So you could enter a really obscure, weird ETF as one of your entries. Okay.
The only caution that I would give, Mark, is that if you're copying tickers from 401ks that are run by your company, many times they have tickers that are not publicly traded. You got to be careful on that.
Yeah, you won't, and that would probably generate an error, and you'd have to find an equivalent. Usually, all of those have equivalent tickers, and we can help you with that too if that's what it comes down to. We really have very little of that, Ken. There's probably maybe 20 ETFs amongst all the groundhog entries for this year, out of 1,000 or maybe 2,000 positions. So not terribly worried about it. All right, so we'll take a look at that here when we go to the website. Ken, here's your chart. It makes a powerful
Certainly does.
I mean,
and the only thing that I would tell people, remember that this is the value line arithmetic average, and the graphs might be slightly different looking depending on which index you're trying to measure. I've seen graphs for S&P that are slightly different than this. I've seen graphs for indexes that have a little bit more red, and I've seen graphs for some indexes that have no red of any kind.
Yep. Yeah, that 2008 sticks out like a sore thumb, doesn't it?
Yeah, but in the same breath, every single graph that I've seen, no matter what the index, has this startling fact that you have a very small chance of losing money over a 10-year time span by sticking with a particular index, and they usually have that high bar on the histogram in the 10 to 20 range, not in one of the other ranges.
Yep. A good reminder, especially if you've got some family member or friend who's new to investing, they need to be reminded that this can happen, no doubt, but when you're in it for the long haul, this is really what you're aiming for. All right. Well, here's a look at our characterization of the market. There's a reason we use the value line arithmetic average. It is what we think of as all of the above investing, because it is a blend of small, medium, and large companies. All of the S&P 500 are in there, along with the S&P 600 and the S&P 400, and then a couple hundred more other companies. So there are small, medium, and large companies in it. The green bars are the average of those companies over time. So that is our representation of the market. And you can see that they zig, they zag, but the red line is the long-term. That's a computerized regression or trend through those green bars. And the slope of that line is 10.5%. That's a reasonable expectation for a long-term return. You can see that the value line 3 to 5 year appreciation forecast actually dipped down to 35. So I think it's one of the lowest yellow or gold dots on the chart there, Ken. It's down in the lower end of its range.
Yeah, we haven't been there since back in 20. I'm not even reading that date very well there. 2021. That's COVID, isn't it?
Yeah. So, the average forecasted value line is down a little bit from where it was, but it's still at 8%. and most stocks are in that 7 to 8 to 9% range. And we basically agree that things are maybe a little bit more overbought than they have been, but they're still not dramatically overbought. There are still opportunities out there. Anything else you'd like to add?
No, the graph says a lot, and I think the longer you keep this in mind, the more you understand what it's talking about. So that's why we keep showing it to you, I think.
Mm-hmm. All right, here's a quick look at the last 10 years for a number of companies. The companies are actually the 10 most widely followed by subscribers, and they actually match up pretty well with the companies at the top of the Better Investing Top 100. And you can see that some of those companies have done extremely well. You start getting up into those 20-something returns, and the returns are pretty spectacular over a 10-year time frame. We do like to point out that this is the index central we talk about all the time. It's okay if you're one of those people out there that needs to invest either with a 401k or by personal choice into some indices. Just realize that you are settling for less, but you're still doing a good thing. I'm not saying that index investing is bad. I'm just saying that we prove as a community that you can do better investing with friends. And we use the Tin Cup demonstration. That's a retirement plan demonstration going back 30 years. And then the Investing Roundtable, which is our monthly. Ken, you want to spend a moment for those that might not be familiar describing that?
Okay. The Investing Roundtable is just a session where we have guests that come in and make stock presentations, 3 or 4 or sometimes even 5. We've been maintaining this portfolio for, it'll be exactly 16 years in a month or so. And it's a great presentation. If you're looking for an in-depth study of a particular stock, it still doesn't take the place of an SSG, but it's an in-depth study done by somebody that has a lot of experience studying stocks and making stock picks. Our regulars on the panel are myself and Mark and Cy Lynch, and we have guests on a regular basis. Matt has been a guest a number of times. Kim has been a guest, and a lot of you in the audience have sat as guests on the round table. We try to have as much fun as we can. We let you vote at the end on what you think the best stock was, although sometimes it becomes a little bit bloody. We're still having fun with it, I think. Mark, I want to change the subject just a little bit also.
Sure.
Less than well, maybe a little bit more than a month ago now, was the first time that Buttonwood had actually had anybody below it on the chart. It had passed CVS about maybe 6 weeks ago. And we both made the prediction that it's only a matter of time now, if we keep the numbers right, only a matter of time before Buttonwood will pass Cognizant. That was the next one to grab on the list and move past.
You might have
and this is the first time it's done it. Yeah.
You might have been predicting. I was praying.
Well, it's past Cognizant now in relative return. They're still negative, and we're still comparing a little bit apples to oranges because of the different benchmarks that are being used, but that's because of the time. The Cognizant time is the last 10 years, going back to the end of the 2025 fiscal year, but Buttonwood's not been around for 10 years. It's only been around for a little bit less than 2 years now.
Hey, we have to
so we have a different. Yeah, we do have a birthday coming up, right? But we do have a different benchmark for Buttonwood because of the time interval going on right there. The same thing true for the round table. We're doing the entire history of the round table, and our 16th anniversary will be coming up soon. And the Tin Cup is also, that's an old portfolio going way back to 94 with that 5% return, 4.9% return. So if you're new to the bull sessions, remember that relative return is just how much have you beaten the chosen benchmark number, And so it comes from nothing more than total return minus its benchmark, giving you the relative return. And that's where that 15 idea comes from, that 15% beat the market every year if you can. It's an approximation because we want to do it over a long term, but the arithmetic's all there and it works out, and it's simple arithmetic. It's not differential calculus or anything.
Good stuff. All right. Here is that demonstration portfolio that Ken and I have been presenting. We generally pick the second Tuesday of every month for our bull session to actually take action. And what you're looking at here is just a time series graphic showing the balance in blue, the future forecast in green, which, by the way, that's a scale change, Ken. We just topped 10,000 for our future forecasted return. And the adjustments that we made last week bumped the portfolio projected return. That's the return forecast, average return forecast for the portfolio, up a notch, and we want to continue to maintain that carefully. You can see that the rate of return now is in the same neighborhood, which makes both of us quite happy over the long term, and a pretty strong looking picture for right now.
I also think, Mark, that it's demonstrating this concept about portfolio par numbers and how difficult it is to keep them moving in the same direction when real return numbers move up.
Mm-hmm.
And that's the crossing of the gold line and the red line right there. Remember, one of them has happened or is happening, and one of them is a forecast into the future. And it's awfully difficult when the market's moving up and your portfolio's moving up to keep your future par at a place where you'd like it to be. And we're keeping it at 12, and that's good. That's real good.
Yeah, we expect that to continue to head north, God willing. Here's a look at the portfolio. If you're curious about what the holdings are, these are real transactions. This is a real money portfolio that we keep for the bull session. And we did decide to hang on to Novo last week, Ken, and it was up 9% on Friday, which is pleasant. But we added Netflix, and we added Adobe, and we accumulated a little more IESC, the third company down. But in general, as you can tell from the previous chart, we improved the overall par. We improved a lot of stuff. We'll be looking at more of that type of before and after type stuff with the worksheets on the portfolios.
We're about a week away from our Jamboree sessions coming up at Mid-Michigan chapter. We're going to be exploring portfolio management, talking a little bit about some basic guidelines and some basic ideas about management, challenging just a little bit some of the orthodoxy and some of the numbers, and giving you good reasons why we think the numbers have to be massaged a little bit. And then we're going to be looking at real-time portfolios. No more submissions, folks. I got more than I can handle, so no more submissions. But if you have your portfolio into me and I've responded to you, then you have a really good shot of us taking a look at it. We're going to be making suggestions for goals, and that's something that I find clubs have a hard time doing, is setting goals for the future and then referencing their goals for the next 6 months or a year. Because if you make some specific goals and then measure yourself against the goals that you and yourself have set, you have a better chance, I think, of improving the performance of your portfolio. For example, we might be looking right now at the percent total column and saying to ourselves, some of our stocks are getting a little bit large in value. That has nothing to do with how good or how bad the stock is. We're just noticing at the moment that they're getting a little bit large compared to our two smaller holdings, which are down in only 3.4% of the portfolio. So those are the kind of goals we might set. The goal, for example, might be, let's not buy any more Novo and United Therapeutics and maybe even any more IESC right now. unless their portfolios kind of subdue themselves, or unless we find reasons why we might be getting a little bit too large for our tastes. So that's the kind of goal we're going to talk about setting.
Yeah, and when the top two positions are both healthcare stocks, you probably want to perhaps shop in the other sectors for the next stock to add to this portfolio.
A great clause to add to the goal, right, Mark?
Yep. All right. Well, let's have some fun with this one, because I think this one really kind of, I don't know about you. We covered, again, very early on in the Bull Sessions series, the book, and the name's going to escape me now, where the guy challenges conventional wisdom. His name was Hans. You know who I'm talking about.
Factfulness.
Factfulness. Yeah, it's a great book if you're not familiar with it and you're out there in the audience. This one kind of qualifies a little bit because you've heard so much about how the Mag 7 is dominated, and it's still true, but this takes kind of the edge off of it a little bit. Shared by the gang over at Ritholtz, part of Barry's annual presentation, and he's kind of highlighting something that I don't think gets a whole lot of coverage. The average came in at roughly 18%, so only two of these are actually higher than that, which is kind of a stunner. I mean, I confess I'm amazed by this graphic. I didn't fact.
Well, I think. Go on, finish, Mark.
I'm just gonna say I didn't fact check it. Did you?
I'm not. No, I didn't fact check it either. But I think so often we get a composite value for the percentage gain in the entire Mag 7,
Sure.
and it's not broken down. But they behave like any other portfolio. Some of them do really, really well, and some of them don't do very well at all. So, I mean, think how many stocks that you could have bought that would exceed what Amazon did last year, for example.
Mm-hmm. And I also think you could bend that into a rule of 5 / rule of 7 corollary. You know, the couple on the left exceeded expectations, and it is just for 1 year, so let's not get too carried away. But the ones on the right, you know, basically underperformed expectations, and then the ones in the middle did pretty much what you would typically expect.
Well, I kind of think also that the group that put this graphic together is doing a little bit of playing with statistics. We don't normally judge our stocks on 1 year returns. We usually look at least at 3-year returns, and you know, our preference, since we're forecasting out 5 years, our preference is to look at 5-year returns.
Yeah, I was talking to one of the audience members recently about how 1 year it's an absolute unpredictable mess. And we admit that, even with the groundhog contest. And she was grateful to hear that actually expressed.
I'm getting a reaction from our audience, Mark, that is indicating that there are people out there in our audience that own all 7 of them, and the graph is certainly correct for 1 year.
Well, it certainly feels good to own them, that's for sure. All right, good stuff. All right, let's go ahead and close down. This is mine. This is actually a celebration of a moment 30 years ago. We had formed our friends and family investment club in Chicago, and in our first couple years of existence, we had managed to accumulate 39 companies. I'm not making it up. I could go back and show you the portfolio. Most of them
That's a portfolio that needs a goal, Mark, okay?
and they were all large. I mean, they were all Abbott Labs, Johnson & Johnson, Merck, Aflac, Disney. You could fill in all 39 names with similar companies. So we found ourselves dramatically underperforming when all of the large caps went into the toilet. And so we learned a lot about portfolio management the night that I suggested to the club that we needed to sell some of our stocks. And one of the stocks that I put on the chopping block was Disney, and you'd have thought that I had set off a bomb in the living room. People were like screaming. A couple of them said, "How can you possibly think about selling Disney? We bought that when your daughter was, coloring with crayons in the middle of our investment club meeting on the coffee table." And I'm like, I'm not sure I understand what that has to do with anything, but I respect that you care about our daughter. But what does that have to do with Disney? So we ended up selling Disney. Speaking of our daughter, her dog just walked in. And this actually vindicates me a little bit, because we did persuade the club to sell Disney. And some 30 years later, you can see they've actually underperformed the market. And then over some of those time periods, fairly dramatically. So
the one thing that I pull off of this chart, Mark, is the concept that we teach beginners, which for a larger, slower growing company, you can expect somewhere in good times around 7%. And my goodness, there's the 30-year return at 7.1%, and 25 return at 6.7. So
yeah, that's certainly not the end of the world, but
oh no, it's something that that we expect from a company like Disney. It's a good, solid company, and it's just not a particular standout when it comes to larger sized companies. It's growing at what you would expect.
This one hasn't been any fun, of course, but I think what this is a testimonial to is something that we try to do across the board, and that is try to avoid being stubborn, try to avoid being overly emotional when it comes to taking care of a portfolio. So I know there are times when I am guilty of being quite stubborn about hanging on to a company that I probably shouldn't, but at least theoretically, right, Ken?
Theoretically, okay.
Good stuff. So anyhow, this is kind of my victory dance from 30 years ago. So good stuff. All right, here you go with just a quick reminder that we do archive all of our presentations on YouTube. So whether or not you're a Manifest Investing subscriber, you can get to these on YouTube simply by going to YouTube and searching for Manifest, or using that link on the page. This is the tour that Kurt did just yesterday, that went through some of the features at the site. And I learn something every time he does that. I think everybody does. But the roundtables and bull sessions are there. Now, he's also rendered this somewhat obsolete, and I'm not sure you're even aware of this yet, Ken.
I am. I just noticed that today, Mark. Yes.
In the recorded events, now this is at Manifest. If you click into events, you can see upcoming events, obviously, but over under recorded events, he's actually gone and retrieved all of these, so you don't have to worry about YouTube anymore. And even more powerfully, and this goes back many years, and he's filling them in very methodically. You actually, if you click on any one of those, here's the recent roundtable, you're taken to, obviously, a visual from the presentation. If you click on that YouTube logo there in the middle of the page, you're taken right to the actual broadcast itself. But more importantly, there's a summary down below where it actually gives a full transcript. Now, some of them are a little bit creative. I think it's still misspelling your name, Ken, so we have to make it smarter. But this is going to allow us to go back to any stock presentation since we began doing this very, very easily. And I thought I had one more page here. There's actually a breakdown. You see where it says chapters here? You can actually go to the topics and the actual stock presentations all broken out into individual chapters on each one of these telecasts. And it took him all of a few hours to do this. I'm speechless. So
it's going to be a heck of a lot easier guiding our people to the recordings, Mark. Heck of a lot easier.
You go to this page and you enter your ticker or your stock or your topic, and you'll get some suggestions on where you might look for that which you seek. And we'll have some good fun with that. All right, before we switch to the website, I did just
now Mark, before you go there, were you showing them how they could search for a subject within these things?
I don't know. Let's try that. We'll actually go live and try that. We've got about 10 minutes. We can go ahead and actually take a quick look. It wasn't working yesterday, but it's probably, it comes and goes as he's tweaking.
The only reason I asked the question is we have somebody in the audience that wanted to know what happened if you want to look for hot dogs.
Believe it or not, and I know you're going to believe it, I've had at least 3 people send me a summary of how many times I've mentioned hot dogs and Portillo's during these sessions, believe it or not.
We got more than you have time on their hands. So, okay.
Just a quick reminder that Ken and I will both be in Houston. Matt, any
And it will
other
be warmer the next
updates?
day, for sure. Guaranteed.
It should be a fun day. I'm actually hearing from some people who think they may travel and join us there just to get a break from the weather.
Yeah, I would make that overt since this is a broader audience. This isn't a live event, an in-person event. We'd love to have anyone to come in. We have an airport shuttle going out for our speakers at least, but particularly for our neighbors in Texas, our neighbors in Les Mis. You may see some of your chapter communications talking about it. It is a full day, but if you're not making Bink this year, if it's too much, we're going to have unique presentations here, but it's going to be a great day, and we'd love to have you here as well.
Absolutely. All right, and Ken, just a quick blurb on what's coming up. I think most of our attendees here are familiar, but
yeah, we're getting a really nice registration for these 3 classes, Mark. You can go to Manifest. Well, I'm not sure you can get them on Manifest. Are they?
I'm remiss. I'll have them there. I'll have them there here within the next day or so.
Okay, great. And if you can't find the registration links anywhere, then just drop me an email and I'll make sure you get the links. But they are on the Better Investing website under Mid-Michigan chapter. 2 classes on January 29th, and then the Jamboree itself on January 31st. That's a Saturday, and we hope to see a number of you there. We are going to start at 10 o'clock Eastern time for the Jamboree. I've had a couple of requests to make it later so that the folks on the West Coast don't have to get up so early. But the vast majority of our members, this is a chapter event now, not a national event, and the vast majority of our members are from the Midwest. And so we're going to stick with that 10 a.m. starting time for the Jamboree, but it will be recorded and posted on YouTube at the same place all the other classes and roundtables and bull sessions are posted. So if you're on the West Coast and want to sleep in, you'll be able to look at it later on in the day or in the pursuing week. So
with that, I'm going to just real quickly visit a couple of things that we've talked about here. Bump that up a little bit. Can you see that pretty well, Ken?
That's pretty good.
Okay, a couple things real quickly. Here is the Groundhog Challenge. And Ken, you said you had a question?
Well, Mark, wait, show it to us first before you, how you got there, okay?
So I'm simply going to the Manifest Investing homepage. On the right-hand side of the page, you have to scroll down a tiny bit. You've got the 2025, that's the current contest.
Okay, now the question was not about the contest. The question was about dashboards in general.
Oh, okay.
Okay, and the question comes from, and give me a second and I'll tell you who it comes from here.
I think you said Janet.
It doesn't make any difference who it comes from. Maybe it is Janet, okay. And she's going to the dashboards, and she happens to be in a club. So she has a club section on her dashboard, okay?
Okay.
And she's calling up a dashboard, and it's telling her it's a $0 dashboard, and it can't be found anywhere. Now she knows that she has it in the dashboards. It was there before we took in and revamped the whole thing. So the question is, does somebody else need a way to sign in? Is there something wrong with with the dashboards themselves? Does her membership is through a model club,
Mm-hmm.
and her dashboards are all zeroed out? Does her sign-in email have to be something different? Well, I can
No.
answer that, Janet. No, it's your regular sign-in, and do not try your BI email sign-in, because that's not going to work, okay?
Yep.
But
I'll
go on, Mark, answer it
I'll
now.
go ahead and give you the short answer. In some of the work that Kurt has been doing, he has disrupted some of those functions. We are aware of it. We are working on it. It's limited to us. It doesn't affect everybody, but it does affect many. Your dashboards are safe. They will be restored, and they should be restored within the next couple of days at the most. So all of the functions are not going to be disrupted, and it's just a matter of resolving some of the issues that Kurt has run into. So it's a logistics issue. It's a programming issue. All of it will go away fairly shortly. We talked about it. He talked about it a little bit yesterday during that the session where he gave a bit of a tour. So you can refer to that.
Mark, could you draw attention, because I think I'm looking at it right here on this page, on how people can send a message to Kurt to let him know about something that's not working correctly?
Sure. Up on the upper right under profile, where the farthest button on the right, if you go down and you hit report a bug, it will go straight to Kurt. I see him too. And you can also do contact support, but report a bug will actually make sure that he's aware of it. Okay? So that's how you would actually look at the dashboards in the active contest. Let's take a look at motivated investors, because people have asked, can you actually do this? This is what we were talking about, making optional during the entry phase, and we'll think about that. We'll be talking about that tonight, in fact, when we get together.
There's that ASTS that I talked about Natalie putting $1,000 into, maybe 14 months ago, something like that. So, and notice it's probably not very attractive at the moment, folks. Okay.
And so you and your wife are both investing pre-earnings, and please tell me that Natalie's not doing pre-sales yet.
No, she's not at pre-sale. She won't do that. But I just think that she liked the idea that this thing took off like took off like a rocket ship. Okay, so.
All right. So in next year's contest, this is what I was getting to earlier. This Rigetti computing is not covered by us. It will be covered. Right now we do a cash proxy, so this cash is actually the Rigetti contribution for motivated investors. That will not be necessary with next year's contest, and they will be continuously updated. So going back, go ahead, Ken.
I'm just noticing on that dashboard, Mark, about how low all the pars are. That's exactly what you want to see at the end of the contest for all of your stocks that had high pars when you bought them at the beginning of the contest.
That's right.
It's exactly what you want to see. Yeah.
All right. So here is the contest entry stuff. You can enter now simply by going to the contest. Like I said, we will debate whether or not we can. Now you can see he's got himself in first place already. So again, it's a way to get around Mark making all those mathematical errors I've been so wrongly accused of over the years. We'll see. And it will continuously update just like the official one does this year. So good, clean fun. The last thing I wanted to just reinforce was the events. If you click on events, you can see, and I will have the Jamboree sessions will show up here within the next day. So they'll be part of upcoming events, and then you've got past events. And here's those recorded events I wanted to show. Here is what he did yesterday. And just for kicks, I wanted to see what it looked like on here. I haven't looked at this yet. Okay, so you can see that it basically described what he talked about along with these topics. So that is a feature with this now. And let's go back and look at the round table. So here was the round table. And so these are all right at your fingertips. And you can see that 10 stocks were mentioned. Let's click on it and see what. Okay, here you go. Here were the stocks that were mentioned during the session, along with some elaboration on what was going on. Pathward Financial, Regional Bank, that Ken talked about. So it's going to be possible. Here's Warby Parker, mentioned under target. Here's Warby by itself up here. So the interesting thing is it's going to make it so that we can find, what did you want to search for, Ken? You wanted to go by a topic?
Hot dogs.
Hot dogs. All right. I was going to do prove, but we'll do hot dogs. Oh, so that is not functional right now.
It's not that granular, okay?
It's not, well, it is, but it's not completely functional because he's in the middle of tweaking and loading. He's probably loading more sessions from the past. So we're not getting these, but you will when he's done stocking the shelves. Get stuck in kind of these loops, and you just have to be patient. Come back and check in a few minutes, and it probably will be there. So, any other questions from the audience? Yeah, it's definitely in the.
We're just getting people that are really liking a lot of what's going on. So, thanks for your kind words. And it's the clock has just reached 3 o'clock today, Mark. So that's a pretty spot on timing for this one. Okay.
Yep, and I will point out that right on featured on the homepage, Netflix is a company that we added to the Buttonwood portfolio. And last week, and here's kind of a discussion of what went over at the roundtable, along with a few new things, but along with some of the core assumptions. So if you want to take a look at Netflix, that is there at your fingertips also. So with that, I think we can say thanks everybody for spending some time with us here today. And we will continue to press on. Any closing comments, Ken?
If the roundtable is new to you, and I did notice quite a few new names on the list today. If the roundtable is new to you, the next roundtable is a week from today at 8 o'clock Eastern Time. And you can register at Manifest, or you can register at the Mid-Michigan website on the Better Investing website.
Yep, a week from today. So with that, Ken and I are going to head for the slopes in Davos.
I'm going to stay in the lodge, okay?
Okay. Truthfully, I would too. So take care, everybody. We will see you next week. Thanks for joining us.
Good night, all.